Hey everyone, and welcome back to the Wealthy Brain. Today we're going to be talking about the Jim Rickards and why he thinks the stock market will crash. Renowned author, lawyer, economist, and finance expert James Jim Rickards has forecast the US dollar will alter in the wake of new financial crisis that may be closer to reality than people think. The expert pointed out central banks still haven't recovered from the previous crisis, while Russia and China have been buying up gold at unprecedented levels over the past decade. Speaking with small caps, Mr. Rickards said the global economy is still wading through the 2008 global financial crisis, with interest rates remaining low and central banks unable to boost their books to previous crisis. According to Mr. Rickards, the 1997 to 98 Asian financial crisis could have brought the world to its knees if Wall Street banks hadn't pulled together to bail out US hedge fund long-term capital, which was about to collapse. The crisis spread throughout the world and hit the US, causing Dow Jones Industrial Average to record its biggest point fall in history by October of 97, triggering a trading suspension. However, a disaster was averted after long-term capital received a US dollars of 3.75 billion bailout. Had it not been bailed out, a cascade of secondary bank bankruptcies would have ensued, with numerous majors around the world including Deutsche Bank, UBS, and HSBC reporting they had either contributed to the bailout or written off hundreds of millions in losses. The following 2007 to 2008 global financial crisis was triggered by the US subprime mortgage market and excessive risk taking by banks with their lending practices. Falling prey to the crisis was Lehman Brothers, which went bankrupt and caused the Dow Jones to topple to its lowest in 7 years. In the bailout, it was left to central banks to prevent financial Armageddon, with the US Federal Reserve taking its balance sheet from $800 with the US Federal Reserve taking its balance sheet from $800 billion to over $4.2 trillion. The US government took over flailing banks Fannie Mae and Freddie Mac, while others including Merrill Lynch, Wells Fargo, and Bank of America received hundreds of billions in the US government bailouts. Who is going to bail out the central banks? With another financial crisis imminent, Mr. Rickards posed the question, who is going to bail out the central banks? Your only alternatives are turn to the International Monetary Fund to basically bail out the world, although that is a slow and difficult process. If the IMF did rescue the central banks, the process could take 6 months to a year. Additionally, Mr. Rickards said there were numerous other challenges IMF provided relief. Jim Rickards believes the next financial crisis will dwarf 2008. For an IMF bailout to occur, it would require 85% approval from all members' countries. If you have a 15% plus to 1% blocking power vote, then it doesn't happen. He added that the US was the only country in the world with a 16% voting power. However, he pointed out a small coalition such as BRICS. Those nations and Venezuela could collectively block any relief action or put conditions on it. And that condition may well be that the US dollar is no longer the global reserve currency. Mr. Rickards said, some people expect the US Federal Reserve to jump to the rescue again in the next financial crisis. What are they going to do if a crisis hits tomorrow? Go to US $5 trillion? US $6 trillion? Mr. Rickards said the other alternative was to shut down the banks. And that's what I expect will happen. They'll close exchanges, close banks, close ATMs, freeze accounts. When people say that will never happen, Mr. Rickards explained it has happened many times before, including Cyprus, Greece, and Argentina. He added, it also happened in the US in 1933 when US President Franklin D. Roosevelt ordered every bank to close. The bank shutdown lasted 8 days, but Mr. Rickards said no one knew how long the closure would be, and it could easily have been a month to 2 months. He pointed out another financial shutdown occurred in the US in 1914 when World War I broke out. The New York Stock Exchange was closed for 5 months, from July of 1914 to December. What does the future look like in the next crisis? Mr. Rickards was quick to point out that he doesn't foresee a dystopian future or an end of the world scenario. However, he said he did expect the crisis will begin with enormous social unrest. Elaborating on this statement, Mr. Rickards noted the veneer of civilization is paper thin. We saw this in August of 2005 with Hurricane Katrina in the US, where the city of New Orleans was cut off and order broke down within days. By the second day, people were becoming desperate for food and water. By the third day, violence had broken out. We had vigilantes, looters, and a National Guard moving in. Civilized behavior only lasts about 3 days in the absence of reliable water, food, electricity, and all the things we take for granted. In a situation where banks are closed and people can't access their money, Mr. Rickards said social disorder will break out quite quickly. This would be followed by a breakdown of internal systems. This is how complex civilizations collapse. It isn't a barbarian invasion, but an internal collapse because of too much bureaucracy, too much taxation, and complexity. To survive this new system, Mr. Rickards anticipates communities will shift to a semi-barter system where skills are traded, and silver, or gold if you have it, can be used to buy food and other essentials. Fall of the US dollar and rise of gold. As the crisis unfolds, the US dollar is expected to become worthless, with the gold a primary valuable commodity. Even then, Mr. Rickards said, in his opinion, it was safer to own most physical bullion rather than gold futures. Options: unallocated gold contracts and ETFs as well. He pointed out there is not enough physical gold in warehouses to meet these paper claims. Slightly different was owning shares in gold mining stocks. There's gold there, but it doesn't belong to you. It belongs to the miner. When looking at investing in gold mining companies and explorers, Mr. Rickards said just as important as the geology, location, costs, grade, and processing methods is the management team. Some gold companies have great management. They know exactly what they're doing and they have a track record of controlling costs. Other gold companies, some of them are frauds. Some may not be frauds but have poor management. So obviously, you don't want to be involved in those. This is all for today, folks. If you enjoyed the video, then leave a like, and if you are new, then do not forget to subscribe. See you till the next video, and thank you for watching.